Have you ever experienced being in debt? If yes, why did you incur it? Is it because for a want or a need? We discussed in the previous video what a want and a need is. Want is what you like to have, and a need is a must-have. However, there are times that we don't have sufficient money for our needs and wants. Because of this, we tend to get into debt just to acquire what we want. So, let's define debt. Debt is the amount of money borrowed from a person or a financing institution. When you are in debt, it means that you have an obligation to return the money you borrowed, usually from financing institutions like banks. Why do you think banks are willing to lend you money? You guess it right, because of interest. Interest is the cost of using borrowed money and is expressed as a percentage. When you borrow money from the bank, incurring interest is a given. Financing institutions don't just lend you money without doing business. When a bank lends you money, they will be expecting you to pay interest. When you pay interest, they will generate income, and that is how they do business when you borrow money. Aside from interest, banks would want to be sure that you will be paying the money you borrowed by requiring collateral. When we say collateral, we are talking about assets in which banks or lenders accept a security for the borrowed money. In case you don't pay, the lenders will take the collateral as payment of your unpaid debt. A collateral may take the form of a real estate or other forms of assets like your car, phone, or jewelry. Furthermore, when you fail to pay the debt on time, the bank will charge you a higher interest and charge you with penalties. That's not all. Failure to pay the debt on time may also affect your credit worthiness. Credit worthiness reflects your ability to pay your debts on time. The less credit worthy you are, the less likely a bank will lend you money in the future. If you ever needed money for an emergency, you will have a hard time acquiring funds. You have to consider these things before getting into debt: interest, collateral, penalties, and credit worthiness. On our next topic, we will be discussing debts that are either good or bad for you.